oil, power, and a country that was supposed to be rich forever, Venezuela sits on some of the largest oil reserves on Earth. Yet today, it barely produces 1% of global supply. That is not a typo. That is a collapse. Now Washington moves fast. A raid, a new interim leader, bold promises, American oil companies ready to return. Billions of barrels suddenly back in the headlines. It sounds like a comeback story. It is not, because oil does not rise from the ground on command. It rises through capital, through expertise, through functioning institutions, and through years of patient investment. Right now, Venezuela's wells are old. Its pipelines are fragile. Its oil is heavy, sour, expensive to move, and its economy is buried under debt. So before you believe the narrative of instant revival, stop. What is happening here is not a sprint. It is a long, brutal test of economics and power. Stay with me. Because the real question isn't how much oil Venezuela has. It's why that oil hasn't saved it. If this analysis sharpens how you see the world, engage now. The next part explains the problem everyone keeps skipping. This story is not really about oil. Oil is only the surface. The real issue is capacity, political capacity, economic capacity, institutional capacity. Venezuela does not lack resources. It lacks the systems needed to turn resources into sustained wealth. Today, the country produces around 800,000 barrels a day. In recent years, it barely touched 1 million. That is a fraction of what it once produced. And a rounding error in the global market. Many hear largest reserves and assume power. But reserves are potential, not production. They sit underground, useless, unless someone can extract them efficiently, transport them safely, and sell them consistently. And here is the trap. Venezuela's oil is heavy, tar-like, costly to process. It trades at a discount. It requires diluents, imports, and specialized refineries. At the same time, the state oil company is weakened. Sanctions restrict exports. Infrastructure has decayed. Capital has fled. So when leaders promise a rapid surge in output, they skip the core question. Who pays? Who invests? Who waits years for returns? Hold that thought. Because to understand why Venezuela fell so far, we have to go back into history, into cycles, into decisions made long before today's headlines. Venezuela was not always like this. 2 decades ago, it was a major oil power. 3 million barrels a day flowed from its fields. Even in 2016, production was close to 2.5 million. But oil wealth has a rhythm, and Venezuela fell into its most dangerous phase. For years, the system treated oil as income, not capital. Revenue was spent, not reinvested. Maintenance slipped, talent left, technology aged. Then politics hardened the cycle. Production terms changed. Foreign firms were pushed out. Legal battles replaced partnerships. And investment froze. When sanctions later arrived, the damage was already deep. Fields were declining. Pipelines were failing. Refineries were under strain. Oil fields are not switches. You cannot turn them off and on without cost. Once neglected, they decay fast, and recovery becomes exponentially harder. Meanwhile, the global market moved on. Shale oil surged elsewhere. Gulf producers expanded cheaply. Capital found faster returns. So Venezuela was left behind with enormous reserves and shrinking output. This is how oil states collapse quietly, not through a single shock, but through years of missed reinvestment. And that brings us to the first breaking point, the moment when decline became impossible to hide. The first real rupture came when the numbers stopped lying. Production fell below 1 million barrels a day, not briefly. Sustainably, this was not a market fluctuation. It was structural failure. Fields that once anchored the economy were no longer producing. Pipelines leaked, storage filled with unusable crude. Refineries struggled to operate continuously. At the same time, sanctions tightened, exports were blocked, revenue dried up, and oil, the country's lifeline, began to suffocate the system it was meant to support. The state oil company could not invest, foreign partners could not operate freely, equipment had to be imported, but cash was scarce. Even moving oil to market required importing lighter crude. This was the crisis beneath the headlines. Not politics, not ideology, physics and economics. Oil production needs constant care. Without it, decline accelerates. And Venezuela crossed that threshold. If you want to understand why recovery is so hard, this is the moment to remember. Because once output collapses, every step back up becomes slower, costlier, and riskier. If this analysis is helping you see beyond the noise, stay engaged. The next part exposes the deeper mechanism locking Venezuela in place. Behind the collapse sits a hidden mechanism, not a conspiracy, a structure. Venezuela's oil problem is not only about wells, it is about incentives. Oil here is conventional. Once a well produces, it can flow for decades. That sounds attractive. But it also means returns arrive slowly. Modern capital does not like patience. Shale oil elsewhere offers faster payback, higher upfront returns, lower political risk. Now add Venezuela's realities. Unclear property rights, a weakened national oil company, a future government no one can fully predict. Investors ask one question first: who controls the oil 5-10 years from now? That uncertainty changes everything. It raises the cost of capital. It delays decisions. It shrinks ambition. Yes, billions could revive existing fields. $10 to $20 billion might add 500,000 barrels a day. But going further requires something else. Confidence that contracts will hold, that revenues won't be seized, that politics won't rewrite economics. Without that, money waits and oil stays underground. This is the invisible lock, the reason oil wealth alone cannot rescue Venezuela. And then came a second shock, one that pushed pressure from slow decay into open confrontation. The second crisis is bigger and harder to escape. It is not in the oil fields. It is on the balance sheet. Venezuela is drowning in debt. Bond debt alone is near $100 billion. Total external debt reaches roughly $170 billion. This is larger than the country's entire economy. And the bills are not abstract. They come with names: Exxon, Conoco, China, Russia. Some debts come from bonds, others from nationalized assets, others from oil for loan deals made years ago. Now imagine being an investor. Every future barrel of oil already has a claim on it. Creditors waiting, courts watching, governments negotiating. This turns oil recovery into a zero-sum game. More production does not mean more freedom. It can mean more repayment. Even if output rises, cash will be tight. Imports are needed to move the oil. Equipment must be bought. Workers must be paid. So oil will flow. But money will leak out. This is why quick revival is an illusion. Debt absorbs the upside and delays relief for ordinary people. And that brings us to the human side. What all of this means for those living inside the system. Now bring this down to the human level. To you, because oil statistics do not buy food. Debt restructuring does not fix daily life. Even if production rises, relief will be slow. Pain will linger. Expectations will collide with reality. More oil does not mean instant prosperity. Much of the revenue will not stay. It will service debt. It will pay for imports. It will stabilize a system before it lifts people. That gap matters because people will be told help is coming while their lives change little. This is where frustration grows. where hope turns brittle, where political pressure builds again. You may hear numbers in the millions, barrels per day, billions in revenue. But what you will feel is delay, waiting, adjustment. This is the danger zone for any recovery, when patience runs out before benefits arrive. If you care about what real economic transitions look like, not slogans, not promises, stay with me. Share this, because understanding this phase is how societies avoid repeating collapse. Now zoom out, because Venezuela's struggle does not stay inside its borders. Venezuela's oil story does not end at its borders. It ripples outward. Every additional barrel shifts trade flows, refineries adjust. Shipping routes realign. For the United States, this oil fits heavy, sour. Exactly what Gulf Coast refineries were built to handle decades ago. That creates strategic temptation. But globally, Venezuela is not a game changer. Even at 1.5 million barrels a day, it barely moves prices. Saudi Arabia and Russia still set the tone. The Gulf still holds the real spare capacity. Yet geopolitically, symbolism matters. Control over Venezuelan oil reshapes influence in Latin America. It weakens China's leverage. It sidelines Russia's remaining claims. At the same time, it sends a signal. That energy is still power. That resources still attract intervention. That history in oil states never fully closes. This is why every decision here is watched closely. Not just by traders, but by governments. And now comes the hardest question of all. What happens next? Because the future of Venezuela's oil is not one path. It is three. There are three futures in front of Venezuela. None are simple. The first is the optimistic path. Sanctions ease, deals hold. Investment flows steadily. Production rises toward 2, then 3 million barrels a day over a decade. Debt is restructured deeply, not erased, but softened enough for growth to breathe. The second path is the middle one. More likely, output recovers to around 1.5 million barrels, enough to stabilize, not enough to transform. Debt payments consume the upside. Living standards improve slowly. Frustration remains manageable, but present. The third path is darker. Politics fracture again. Contracts are questioned. Capital hesitates. Oil rises, briefly, then stalls. Debt overwhelms gains. And the cycle restarts. These paths are not chosen by oil alone. They are chosen by institutions, by patience, by credibility over time. Oil can fund recovery, but it cannot substitute for governance. And this is the final lesson. Why this story matters far beyond Venezuela, and why the ending is still being written. Venezuela's oil will not save it by itself. That is the illusion history keeps offering. And the trap countries keep falling into. Oil can buy time. It can stabilize. It can fund rebuilding, but only if the system around it works. What we are watching now is not a rescue. It is a test of whether Venezuela can turn potential into capacity, promise into institutions, revenue into renewal. For years, the story was collapse. Now it is uncertainty. And uncertainty is better, but only slightly, because the hardest work comes after the cameras leave, after the deals are signed, after expectations rise. If Venezuela succeeds, it will not be because of barrels. It will be because it learned how to manage power, economic power, political power, and time. If this analysis helped you see the deeper structure beneath the headlines, stay connected. Share this. Because the next chapter of global energy will look a lot like this one. And if you want to understand how oil, debt, and power reshape the world again and again, this is only the beginning.